How strong is the dollar right now, and how much is that going to hurt stock market and earnings?
You know, the dollar's rise has been very acute, but I don't think it's gotten to the point where you worry about disrupting the stock market. And I'll give you a few reasons. The first of which, it's been a very quick rise, but it's been contained. The dollar's up about 4% since its recent lows. Compare that to what happened in late 16. The dollar was up about 10%. Second of all, as you pointed out, the dollar is rising because the U.S. economy, once again, is proving resilient. We saw that this week again with the manufacturing survey data, with the housing data. And finally, I'd point out that while the dollar rising is a de facto form of monetary tightening, most other measures of financial conditions, rates, volatility, credit spreads are actually going the other way. So if this is the extent of it, I think the market can survive with the dollar where it is today.
Russ, if we do see an extended impact from the coronavirus and Chinese GDP suffering more than people expect, is it plausible that the central bank around the world that will, of the developed markets at least, that will ease most significantly is the US? Because it's not really like the Bank of Japan or the ECB can do much more, whereas the Fed does have room and could plausibly, in a global slowdown environment, cut a couple of times.
The Fed does have the most latitude of the major central banks. I think you would need more evidence that the virus is affecting economic activity, consumer confidence, consumer behavior. I actually think the central bank that's going to continue to ease and help support global liquidity is the PBOC. Obviously, the Chinese central bank has already taken a number of measures. I would expect those to continue. And to the extent that that also supports global liquidity, that's another reason why I think the world can survive a moderately stronger dollar.
Do you think that the stock market is underestimating the risk of the hit to global growth here?
Look, this is the $64,000 question. It's a hard one to answer. None of us are epidemiologists. Again, the things that we're tracking would suggest that at least from the metrics that we're looking at, the number of new cases, this is not accelerating. Now, the question is, how quickly does manufacturing come back? How quickly do migrant workers in China go back to the factories? At the very least, this is a hit to the first quarter GDP. And what's also becoming apparent is the rebound may be slower than a lot of investors thought in the beginning. And that's one reason why, despite the surging stock market, bond yields have remained low. They're reflecting that hit to growth, which perhaps doesn't rebound as quickly as we'd like.